Hey everybody, this is Coach D with TackleTrading.com, here to talk to you about volatility as it pertains to underlying securities. Volatility is a statistical measure of the dispersion of price for a given security or market index. Volatility can be measured by using the standard deviation or variance of price from that same security or underlying asset. The more volatile the price variance, the more potential risk for the security. There are two distinct types of volatility that traders need to understand. Historic volatility is the statistical volatility or measured historical price volatility of the underlying security. HV is known volatility because it is based on actual price changes in the underlying. Implied volatility is the projection or implication of potential volatility primarily used for option pricing. Higher estimates of implied volatility will increase options premium, and lower estimates of implied volatility will decrease options premium on average. We're looking at a graph to help us understand historic volatility in price dispersion zones. We have a graph here that represents the stock that is about $100 per share, and the bottom measures time, January, February, March, April, May, June, July, so on and so forth. Well, if we were to look at a stock that had a smaller dispersion zone where prices moved a little bit, maybe they oscillated just a little bit up and down, small percentage change, let's say less than 5%, price changes, that would be a smaller measurement of historic volatility. If we see that the similar price stock has a more volatile swing, a larger dispersion zone, prices covering bigger swings, shorter period of time, again, that would give us an idea that that stock is more volatile, more historic volatility. If we see really large dispersion zones in price, high percentage changes in price over short periods of time, again, we would say that that stock is highly volatile, that underlying security is highly volatile. This can be used, applied on any index, security, ETF, anything that's tradable. We can measure the historic volatility on, not to be confused with implied volatility. That's an entirely separate conversation. Historic volatility is the known or measured volatility, and again, it's known. We can quantify it specifically. Now you have a very clear understanding of what volatility is, historic volatility specifically. We'll talk about implied volatility in a future video.